Hey Troy, it's the 18th of October. It's about 9 p.m. Central Standard Time. And yeah, I understand your frustration. But let's take a quick look here. This looks like it's a NEE. So let me see if I pulled this up a moment ago. Here we are. So this is, here we are. We're looking at Nextera Energy. So first, if we back off, we can see this has been a very strong run, very big continuation pattern. Let's look at it a little closer, because you identified and shared your observations right here at the new all-time high that it kind of pulled back. You can see here this is a 50-day simple moving average and this is a 200-day simple moving average. So in the continuation pattern here, it kind of traded into the 50-day simple moving average, found support and rallied again. Let's take a moment. So if we just try to, visually we can see there's a nice bullish trend. But if we just draw and define a channel, we can kind of understand what's going on a little bit clearer. So there's our resistance, and we'll just do kind of a reverse trend line here and make it match up. So they don't always match. But looks like we have a couple tests here, at lows, and another test here. So test, and here. And I'll exclude this because I'll just say that on this drop it looks like prices became oversold relative to this bullish ascending channel, and then they continued higher. And if we look at this a little bit closer, it looks like actually we're in a trading range here since May, for almost a year. So I'm looking at this, this range right through here. So we spent a year in consolidation here. And then it kind of broke out, back tested it, and then continued with this continuation pattern. And kind of what was the catalyst for it to start consolidating and trade laterally. And the reasoning here, in retrospect, is just because it was trading into the resistance line, right? So now, in the absence of using any technical indicators, we can see that it's overbought relative to the actual trend. So if it's overbought relative to the trend, how's it going to work off those overbought conditions? It can either kind of drop or it can trade laterally. And you can see here that it traded laterally and then it broke down. And it broke down here with expanding volume. It's very bearish. But if you look at this, the breakdown here, you can see that we lose 50-day, we lose the 200-day simple moving average. This is a reasonable sell-off given the time spent in consolidation. This is some distribution here, and that would be a small little markdown with some reaccumulation, and that resulted in this continuation pattern if you're referencing maybe a 2 or a 4 hour chart. But if we look at, why did it stop here? Why didn't it go lower? And if we look at it, it looks like here we had our consolidation range, and the same level that it broke out of here, it back tested and confirmed this level. So this is a prior level of consolidation or trading range accumulation that it rallied out of, confirmed it as support. Resistance was confirmed as support, rallied higher, forming this continuation pattern, became overbought, broke back down and retested it. So this big effort here, this is huge selling. I would say this is a big effort, little reward. This was bullish absorption, and then we rallied away because buyers obviously thought that this was oversold relative to the actual trend, and then we continued higher. We actually recaptured the demand line here, just like the IWM currently has, and then we kind of traded laterally and we broke back down and we back tested it. So we recaptured it, but it was necessary that we confirm this level of recent resistance as support before we continued the continuation pattern. And we just kind of recaptured that 50-day and resumed trading until we then hit the resistance line, which is where you shared your observations. And as we hit this resistance line, it looks like maybe we're a little overbought again. And you can actually see that participation is contracting, and it's time to trade laterally. And given current market conditions and the strength of the market, it found support here, the 50-day simple moving average, and has made new highs. Let's save this and take a closer look on a lower time frame. So let's maybe look at the last 4 months and see what it was that you're looking at. So yes, this is the same channel that we have, defined by the lower trend line, the demand line, and the resistance line of the upper trend line. And you can start to see that as we break through this prior level here, that we do so with with increase of upward movement here. This is a very bullish, vertical bar here. And then as we rally higher, you can just see how it changes. The price spreads are narrower. Demand's having a difficult time overcoming supply, which means there's probably some selling in the strength. This is what I look for a lot again. So this is a high volume area. So this is this big effort. And you can see that it's associated with this selling day, right? So we had a open higher, and it reversed, and there's a lot of participation in selling pressure visible here in the volume that failed to break down and make a new low. That is, you have to ask, if there's so much supply, why didn't prices break down and lose this level of support? And the reason is there's buyers. Buyers had to have been accumulating the weak hands of supply. That's reaccumulation, and then that was enough energy to kind of control the overhead flow to kind of continue back into this resistance line. As you can see, as we kind of trade higher again, volume is starting to contract a little bit more, and now we're starting to see some supply, right? If you back up a little bit, you are absolutely right in your observation. Supply is expanding, selling, 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 selling. It's greater and greater. So not only does it have to expand, if supply is expanding, supply has to overcome demand, and it has to do so in price action. And we can see that supply is overcoming demand. The increased volatility is very representative of distribution. So we can see that here, very bullish, very bearish, I apologize. This is a sign of weakness. We gap a little higher, upper wick, there's some selling. We break back down, but there's still buyers here. We can see that lower wick, this actually forms a little spring, and then a big attempt here, right? Big buying effort, very large vertical bar that did not have any follow through and then reversed. So that is some distribution. And then as we can see here, we're looking at, this session here. So this big vertical bar here is associated with this less demand. And then now here we are again, just the opposite of the observation that we shared here, this big bearish effort that was absorbed. Now we have a big bullish effort, right? Big bullish volume, narrow price spread, didn't go anywhere. Why? Because there must have been sellers present. And then it broke back down, and then we see some distribution to a markdown. But then as you can see that now we're just kind of oversold relative to the 50-day simple moving average. We kind of consolidate. We're consolidating below this level, right? So we lose this level of support. We need to confirm this level of support as resistance. We're consolidating below it, but any attempt to break down doesn't result in any other supply. Supply is actually contracting. And then this little area, this session right here is what I would call a changing character. And this is a spring. This was an opportunity because it got down below this established trading range. This was an opportunity that if a lot of weak hands are present, this would break down into the actual lower trend line or the actual demand line. The fact that it didn't and it returned back to the trading range creates a spring. Prices then kind of broke back down. They back tested the spring and then rallied away. So now we're back into this prior level of support. We recapture this lost level of support, confirm this level of resistance as support, and then we rally back away into the resistance. My observation is that it looks like we saw some selling, some resistance. Again, here we have this nice bullish new high, open a little lower, and then we're seeing an attempt to go through here. So we have an inside day on pretty reasonable volume. I think there's some distribution here. There's still going to be some. These guys here are taking profits. These guys here who are bag holders, they're closing their positions to break even. We have these guys here that are taking profits, and then we probably have some new shorts entering as we trade in the resistance. But at the present time, it looks like there's enough demand that it is reasonable that prices would continue into this upper trend line, and that there's not a lot of supply to suggest that we just would quickly reverse and lose the 50-day simple moving average. So it looks like the bias here would remain that we would travel, continue this continuation pattern into the resistance line, and then probably trade laterally. And in that consolidation and lateral trade in the overbought conditions, we can attempt to see what the story is being told and create a bias of whether we're seeing some distribution or some reaccumulation. Those are my thoughts. I hope you found that helpful. Good luck moving forward.